what you call market. That's fine. Generally, today we are going to look at what you call market analysis. Yeah, we are going to look at what you call market analysis. We are going to analyze the market. You're going to see how best can one analyze the market individually without waiting for his senior, without waiting for his upline, without waiting for his own commenter, so that at least you can take opportunities which are within the market. Generally, the market today, as you are seeing it, the market is just ranging. The market is just ranging. Over the weekend, we saw our Bitcoin. Why do we rely much on Bitcoin? The reason being, it is the father of all cryptocurrencies. So most cryptocurrencies respect its movement. Generally, we saw the market over the weekend, it dipped. Yeah, it dipped, but the depth was not too much. We have seen over the past week when Bitcoin is trading in between. Bitcoin has been trading over the past week, has been trading between $99,000 to 109K dollars. This difference in between 99 and 109 is not too much as such. If at all we have to relate it with the previous depth, with the previous ways how Bitcoin has been dipping. So this kind of Bitcoin prices or this kind of Bitcoin behaviors, it is signaling us to what we can call out season. Yeah, it is signaling to us what we can call altcoin season. We are soon to experience this altcoin season. In case things they don't change, in case things move in the way as per our expectation. So this small dip thing, this small dip Bitcoin has experienced, we hopefully it has been largely due to information which came from State House, that is United States of America, when President Trump is promising to slap some tariffs to Japan and other countries, which is a 20% tariff. Yeah, this guy, as I told you last time, that we celebrated when he won, thinking that he's a pro crypto, but there is a way he's doing his things, making this business to scuff a little bit. But nevertheless, we need to be present and learn. We need to be present and do this business. So that is what is generally into the market. The market is ranging. It's not pumping, neither seriously dipping, but it is in a ranging direction. It is just ranging in between the supports and the resistance areas. So as we are approaching into out season, we have seen so far, there's something I needed to share with you here. We have seen so far, with my board. Yeah, we have seen so far that of recent days, when we are approaching to out season, or what you call a path to out season, we go through different phases. That is, there is phase 1, there is what you call phase 2, there is also what you call phase 3. So for phase 1, we shall see, or we always see, very many people, or those who we call the institution and the whales, or those bigger traders, putting money into Bitcoin, causing its prices to move up. We have seen already that one. Bitcoin was trading at a price of around 70K before, but as of now, it is trading at a price of 180K dollars. So we have seen prices of Bitcoin surging, moving up. That happens normally when we are into these paths going into out season. What is out season? Out season, this is where we can see Ethereum, okay, dominating the market below Bitcoin. Right now, Bitcoin is the one which is dominating the market. I've been checking in the morning. I saw on market cap. Yeah, I saw on market cap when Bitcoin is dominating, when Bitcoin is dominating by 74%. Altcoins are dominating by 26%. So altcoins are driven by this Ethereum. So along the way to alt season, we shall see that Bitcoin will have huge amounts of money being invested in by the traders. We have seen already that one. Now of recent, I don't know whether you people, you saw it in news when United States of America deposited, or United States government deposited $218,000 into Ethereum on their Coinbase account. These days, we are seeing that different traders or bigger traders, or whom we can call the institutional traders or the whales, are moving their money slowly but slowly from Bitcoin into Ethereum. Then that drives us to this point, which is saying that money flows into Ethereum, but Ethereum will start struggling to outperform Bitcoin. This kind of struggle, it is healthy and healthy to us traders, because for us, we are not going to trade Bitcoin. Our money is very small. That's what I can say. But we can at least trade Ethereum. And Ethereum is the head boy to other alternative coins, which you call alts or alti coins. So after that, we shall see again Ethereum trying to go back. These days, I was looking at Ethereum, the way it is performing. I was looking at Ethereum, the way how it is performing. Of recent, let me use this 1 day time frame. Of recent, we saw Ethereum tried to pump seriously. Later, it dropped down. As we are following this out season chart, I'm trying to show you that Ethereum will try to go back, then start struggling to outperform Bitcoin. If Ethereum outperforms Bitcoin, then we shall enter into another phase called Ethereum phase. Now, what happens here at Ethereum phase? I don't know whether my screen is wide enough on your side to see what is on it. Is it wide? Is my screen wide? Give me a 1 to know that you can see what is on my screen.
Very wide.
Okay, thank you. If it is wide, thank you. So at Ethereum phase, we shall see when Ethereum is outperforming Bitcoin. Some people might be getting confused that what is Ethereum? What if Bitcoin outperforms Ethereum? How are these things connected? Taking you back to the genesis of crypto, it was Bitcoin which was created first. When Bitcoin was created first, not every financial problem Bitcoin was able to solve it. Then the innovators thought of creating another coin which can continue solving people's problem into transactions and other related issues. Then they created Ethereum. Okay. So after Ethereum, other coins fold like Solana, they fold. We have Tron, all those ones. But let us majorly look at this one. So if you see that Bitcoin is doing wonders, expect Ethereum and other coins below to not to perform as per our expectation. I'm saying per our expectation because for us, we are just small traders. Actually, we are called retailers. Buy one, sell one. Buy one, sell two. We are retailers. None of us can put $10 million into the market, never. So now, after seeing that Ethereum is trying to outperform Bitcoin, other coins will start following up. Among the other coins, those are the coins which you call coins with larger caps. If I say larger caps, one may ask, reader, what are you trying to mean with larger caps? I'll just go to my coin market cap. This is the application I told you. At CoinMarketCap, last time I told you download it and have it. There is this word market cap, okay? there is that word market cap. It's the only one I'm going to look at. So coins are categorized number 1, number 2, number 3 based on their caps. So if one day you find out that Ethereum has dominated or outperformed this Bitcoin, that is one of the signs showing us that we are entering into alt season. Coins to perform seriously well. I mean, our coins we are trading. So when Ethereum has outperformed Bitcoin, then money will start now moving from Bitcoin and also Ethereum going into these other coins with larger caps as we are moving to what we call phase 3. After this phase 3, then we shall go to phase 4, which is the real alt season. So, which is the real alt season? Why am I explaining this one? These are things they can direct you when you are entering the market. I told you last time, when you are trading, you don't just wake up in your bed, morning hours, evening hours, you are from sleeping, you are from somewhere, just enter trade, just enter coin and start trading. You know, there are very many things you need to look at if at all you are going to win the market. First of all, look at the market generally, how the market is behaving. 2, as you are going to enter the market, which kind of coins are you concentrating on? 3, which season are we in? Are we in the meme season? Are we in the user case season? Are we in the real world asset season? Which season are we in? You find someone entering the market just because he saw the red candle, just because as he was reading the charts, he went and found out that there is a red candle or there is a green candle which is moving up. He said, now there is money here. He also just enters the coin without knowing why there is that, why that candle it is, or why that coin it is performing seriously. So as a trader, we don't expect you to just trade like that. No, we expect you to base on some factors before choosing which coin to trade and what you are going to trade. Another thing I may talk about, it is fear and greed. As you're analyzing the market, ladies and gentlemen, it is so much important for us to look at this thing. People in crypto are losing money. People in crypto are getting off the market because of 2 things. That is, 1, fear, 2, greed. Actually, these are the only thing that drives crypto. If you can handle fear within the market, and if you can handle greed within the market, you can become successful. Remember, we trade to win the market, not to make profits. If you are trading purposely to make profits, of course, you are going to be under here. You are going to be under this one called greed. If you are trading to make profits, you trade under greed influence. And again, if you are trade only focusing on profits, there are very many mistakes you'll make on the course of fearing what to do and what not to do. But if you are trading purposely to win the market, you will know that once I'm going into the market, it's better to eat 1% out of the market. I go to another coin, I take 1% of the market. I go to another coin, I take 1% out of the market, than going into one coin and I take 3% with all my capital, $1,000, which I have on my account. This is called greed. Whenever you get another mind in your thinking that, now I have $1,000, this coin is seriously pumping, like this magic. I have my $1,000, this magic is seriously pumping. If at least I enter into this coin with my $1,000 as the first buying amount, even if it pumps by 2% right now, okay, by 2%, 1,000 divided by 100 times 2, I'm going to make my $20. Of course, you will enter into the market. The coin starts pumping. It goes by 0.5 up. As it is hitting 0.99, it starts moving down, starts moving down, starts moving down. What made you to put $1,000 in this coin at once? It was greed. You were too greedy. Now it has started moving down. You know what you are going to happen? You have been in a floating profits of 0.99, but your greed gave you 2%. You wanted to take $20 out of the market. Now it has started moving down. It has moved down. It has made negative 0.5. Now it has made negative 1. Fear will come in. Once fear has come in, you are selling at negative 1%. You see, I better lose $10 than losing my 100 or my full $1,000. Looking at this loss of $10, if you have been trading with $1,000, now 10 is off, you are remaining with 990. Looking at the loss of this $10, how did it come? It came because of greed. You traded a pumping coin thinking it's going to give you 2%. It retraced a bit. You started getting what you call fear. Now this fear, it is telling you to sell at loss. You either lose small than losing big. The person who originally had 1,000, now you're having $990. If the same thing is repeated 9 times, if the same thing repeated 9 times, you are going to lose, let's say, if you repeat losing $10 times 9 times, here now you are losing $90 plus the 10 you lost at once. Now you're having $100 lost without any single profit made. So traders, as we are doing this business, always work on your emotions. It is emotions which creates problems. These emotions comes along with greed or with fear. That's why as we are entering into the market, love this coin market cap, these people were so smart and they say, before entering into the market, go and look at how traders' emotions are in the market as per that exact moment. How is it? Do they have too much fear to enter into the market? Are they so greedy they want to take up positions and they make profits? If you find out that traders, they are so greedy to enter into the market, be careful when you are entering that market, because that will be automatically a pumping market. But you find out that most traders are fearful, okay? Most traders are fearing to enter into the market when this greed index is either here at red or at this partial red. Then this one would be the best time for you to enter the market, because here the market has gone already down. Most of them have been fearing to enter into the market, and others have taken away. Now the general market has become cheap. That it is. Work on emotion as you are going to analyze the market. Don't just enter the market anyhow. This market is not for your grandfather. It's not a family business. What you need to know, and you don't need to forget this one, in crypto industry, not only in crypto industry, but in any business, what you need to know, we have two people, the buyer and the seller. The buyer wants to buy cheap to make profits, and the seller wants to sell high to make also profits. All our targets are focusing on profits. But what is funny is, one of these two to make profits, one must lose. May I repeat this? One of these two to make profits, one must lose. There is no pool in this crypto market, like a swimming pool, that there is money just placed there by God for you to just come and take it away. Never, my brother, never, my sister. There is no that pool. When you see that you have made profits of any amount of money, if you see that you have made profits of any amount of money, be it $1, be it $100, be it $10, better know there is, can I use the word fool? Better know there is a fool somewhere who entered the market just like a fool. I'm sorry to use this word, but it's the right statement I have to use. Just like a fool. And now for you entering the market in a smart way, that's why you are taking his $100. That's why you are taking his or her $1. Now, if you do the same mistake and you just enter into the market, there is a smart person outside there who is ready to take your $10, $20, because for him or her entered in the market smartly. Do I speak any sense? I want to go deeply to analysis. Do I speak any sense? Give me a one in the chat to know that I'm speaking any sense to you. I'm going now to analysis, deep analysis. How do we analyze the market, especially technical? So people are saying I'm speaking sense to them. 45 minutes, no, 35 minutes remaining to end this call. Now, told you what you need to consider when you are entering into the market. Do some kind of analysis, either fundamentally, technically, or sentimentally. I've talked of fundamentals. Those are the ones I started with. I've talked of sentimentals, that is where fear and greed falls. Now let us go to another form of market analysis, which is called the technical analysis. So under technical analysis, we majorly focus on what we call indicators within the market. That is under technical analysis. Before talking about technical analysis, I wanted to make this point in today's class. It's about this gentleman, futures trading. These days, I'm seeing very many people are making a lot of money. They're jubilating. They have even a saying, is it no risk? Is it no risk, no Ferrari? I'm seeing it no Ferrari. Which kind of that? Who remembers that slogan these days? Somebody can type it in our chat. Is it no risk, no Ferrari? Is it no fear, no Ferrari? Who remembers it? Last time I saw it with the leader Carlo. No risky, no Ferrari. Yeah, that is the slogan these days. People are saying no risky, no Ferrari. Ferrari is one of the expensive luxury car. Okay, it is so expensive, and to buy it, you must be a don. You must be a well-off person. So why do these people use this kind of slogan? They're driving our minds toward the other point that if you don't take a risk, you are not going to make enough money to buy a Ferrari. This is right. Life is full of risks. As we are sleeping, it is a risk. We don't know whether we shall wake up, whether we are alive or dead. That is a risk automatically. 2, as you are going for your work, it's a risk. You don't know whether you will be paid the salary or not. That is a risk. So life is full of risks. And know you can go about risks. Believe me, you have to risk to get what you want or to reach somewhere. But these risks must be calculative. So as you are entering into this futures trading, my appeal to you, never and ever base on your leader's advice, suggestions, or comment to trade futures. That is the first advice. 2, if you feel that for you any loss can make you collapse or die, don't go to futures, because in futures, loss is real. 3, if you feel that you are a gambler, you are just gambling in this business, leave futures alone. With the futures, if you want to be a good trade over there, you need to learn individually. You need to learn as you and understand what to do. You need to know that in case of this and this and this, what am I supposed to do? But if you are the person who sees the market changing a little bit direction, you are the thought market is going to go up and you long a coin. Now market is moving it down. You take a screenshot, you send it to your leader. Leader, now look, now see it is like this. Leader, what can I do? Can I stop this coin? Leader, what can I do? Leader, please, leader, what can I do? Leader, this and this, please leave those futures. Futures, they need someone who can take a decision by your own self, not by any other person. Those are the futures. 2, if you think that for you to enter market into these futures is by luck of these candlesticks you are seeing moving without doing what we call clear analysis, again, leave futures. 3, if you are trading with the borrowed money, you know, some of the people went to the banks and they borrowed the money, they brought it to crypto, they wanted to get a cow from a rabbit. You borrowed $1,000, you want to make $1 million within a month, leave futures. And lastly, if you fear to lose money, leave futures. Just requesting you. I have a reason why I went to that side. So, having said that, let us see how at least we can analyze market before entering the futures. We are going to base on technicals, or what you call technical analysis. Remember, I told you technicals covers like 15% of the general market analysis. It is fundamentals which covers a larger percentage of 60. So, as you are learning technical analysis, also give your minds to focus on fundamentals. It is so nice. And again, sentiments, they also covers like 15%. Yeah, the remaining percentage of like 10 or 5, it should be your own decision, your personal decision, whether you can enter or not to enter. Under technical analysis, we are going to look at how one can use the available indicators within the crypto space to analyze the market, thus making an informed decision and enter into the market. However, if I say market, I'm not meaning the general market. Don't go and apply those indicators into the general market to get which coin exactly. No, these things starts with what you call proper coin selection. How do you select your coins? What do you consider when you are selecting a coin? 2, you need to be knowing what you call proper risk management. And 3, proper capital management. After that one, now apply the word market basically on that very coin you are going to trade. As you are going to trade a coin, you need to know that when market is moving around the coins, or rather when the market is moving around, this market covers a journey of 100%. So market journey is at 100%, assuming market is to move from point A to point B. From point A to point B, it will cover a journey of 100%, and coming back from point A to point B, it covers also a journey of 100%. This journey of 100%, it can further be divided under 3 phases. Okay, it can further be divided under 3 phases. These phases are the ones we normally look at, or are the ones we normally consider before making a decision to enter a coin. If you are analyzing the market technically. And these phases, I told you, they make 100%. This is what I mean. From up here to down, 100%. From down here to up, that is 100%. So this journey gives us, or this journey is the one which can be further divided into 3 phases, which phases we can name as the expensive phase. Market can go into a phase called expensive. Another word one can use to mean expensive, it is premium. If you hear someone talking about premium, that is also expensive. Another word one can use to mean premium or expensive, it is overbought. So that is one of the phase. The second phase I can talk about, it is called the pivotal phase. I'm going to explain these ones a little bit in details, then we go to the next. Another phase one can think about, it is called the cheap phase. Another word to mean this cheap, it can be discount. Another word to mean discount, it can be oversold. Let's bring these phases into real life situation. Hopefully, you have ever gone to the bank, not bank, to the supermarket or to the hypermarket, those big markets. Those supermarkets, items over there, there is no need to bargain. Each item has its own cost. You will find a price tag put onto an item. But you can go to a section and you find when items over there are being labeled with the word discount. And they put buy one, get one free. The meaning of this discount is the original price has been reduced. If it has been buying $10, now it is on a discount, let's say 2%. Then you need to know what is 2% of $10. That is $10. What is 2% of $10? That is 0.2, meaning the price has been reduced by 0.2 discount. If the price has been reduced, the one which has been expensive, now it will become cheap. That's why this phase we can also call it cheap. In crypto space, when coins have been expensive, now are moving down to the phase of becoming cheap, we shall say this coin has been giving money to very many people, meaning very many people have sold this coin. Because very many people have sold this coin, it goes into a phase we name as oversold. Once a coin has been sold to very many people, it goes to a phase called oversold. Now it has become cheap and it is on discount. And this is the discount part. It is the most, or it is the suitable phase, discount part, cheap part, or oversold part. This is the suitable phase where one would enter into the market. None of us would love to enter into the market when the market is here at premium. I'm going to explain this word premium using the real life examples. Those who have ever traveled by aeroplane or who have ever used the flights to move from one country to another, we have different classes within the aeroplanes. There is a class called economy. There is another class called first class. There is another class called business class. But between business class and economy, between business class and economy, between business class and economy, there is another class here which can be called premium. Okay, it is not too expensive and it is not too cheap, but it is still expensive. That it is. Sometimes different airlines make business class to be the premium, meaning it is so expensive, not everyone can travel by this class. Here in the crypto market, when market reaches what you call premium phase, better know it is cheap. It is expensive Very many people bought that very coin. Now it has become expensive. If for you, you are buying it from this area called premium, you are doing what we call buying high. You are buying high, yet we are supposed to buy low. If you want to buy low, always focus at buying from oversold, all cheap, all discount. That is buying low. When you buy low, the coin will move from oversold. It goes to the second level I'm going to talk about. If it surpasses that second level, it goes to the last level called premium. By the time it reaches premium, everyone here wants to take out his money because it's already in profits. Now, if you make a mistake and enter coin when it is already here in premium, those are the ones you are hearing crying over huge floating loss and floating for years and years. That it is. Are we still together? Are we still together? Are we still together, members? Are we still moving together? I'm going to explain the third phase. I've talked about the first phase called, are we still together? Give me a one in the chat if we are still together. Give me a one in the chat if we are still together, so that we'll move to the second part if you are still together, so that we move to the third part. Okay, people are saying we are still together. I've used the different colors here to explain this. I'm saying it is so nice to enter a trade when it is here in oversold. Okay, when it is here in over, so that's why I've marked it as green. It is very risky to enter coin when it is here in premium all over bought. However, along the journey, when market is moving from point A to point B, I told you it covers 100%. But there are some things which can happen along the way. Now this is our market moving from here going up. When it reaches here in this third phase, which is in the middle, I told you it is called the pivotal phase. This pivotal phase, what is the meaning of pivot? Let's borrow the knowledge we learned from secondary when we are learning about machines. In machines, there is what you call fulcrum or pivot. You remember the pulleys? Yeah. Do you remember the pulleys? Those who remember the pulleys, hope you have ever heard of this word, fulcrum. Another name to mean fulcrum, it is pivot. Yes, another name to mean fulcrum, it is pivot. So when market is moving along the way, it can enter into this phase called a pivot. Pivot, it is a turning point. Market can turn along the way here, either to come back to oversold, that is cheap area, or to continue moving up. This same market which has moved up now here in premium or expensive phase, it will be pushed back because it has now covered 100% journey. If it started from 0% here, now it has covered 100% journey. Once it has covered 100% journey, chances are available in plenty for it to come back here, either to pivot or go down through pivot back to cheap area or to the oversold area. But in between here, as market is moving, it is so possible to change direction. The one which has been coming from up, going down, it can change direction here to move back again up. And the one which has been moving from oversold area here going up, it can change direction to come back down here. So a lot of things normally happen is here in the pivotal area. And this pivotal area, if you are using trading view, that area is marked by 60% and 50%. Where you find 60% and 60%, those are pivotal area. Market normally changes from expensive to cheap, from cheap to expensive, but it normally changes in between over there. That is the third phase. as the market is moving, it will cover those third phases. So you have to be careful to know under which phase this coin I want to trade is lying in. If you find out that your coin is lying in this premium phase, I'm of the view, leave it. Look for another coin which at least is lying in this cheap phase or in this pivotal phase. Because at this pivotal phase, we have told you there is a chance of market going back or there is a chance of market continue going up. Here it is probable or it is under probability. As you are probing for it to move up or down, that's why you never see us giving you a signal without what you call drop. It is the drop which is saving us from those kind of changes. If the market have been hoping to move up, now it has gone down, let my robot continue buying these drops. So if the market changes again a direction from down and now it has gone up, the robot will start selling for me these drops, which are these margin call drops, which bought, and now I'm making profits. That's what I can explain. I can talk about when we are looking at market journey and their phases. I've told you we're having 3 phases. That is expensive, premium, all overbought. That phase, it is so risky. Another phase, it is called pivot. For pivot, market always changes direction over there. Then the last phase is called oversold, cheap, or discount. Market, when it reaches at that phase, that is the best time for you to enter into the market and take a 2%, a 1%, or a 3%. That it is. Are we still together? Are you still together, members? Are you still together? As time is moving, a few minutes remaining. Are you still together? Just give me a one in the chat to know that you are still together. Just give me a one in the chat. Okay, Mr. Teban is saying we are still together. Now, one may ask, leader, what causes market to change this direction, which has been moving up, now it has gone down, which has been going down, now it has gone up. Market, as it is moving, it faces what we call resistance. We all know resistance. It means resistance. Those who studied electricity, we have resistance, currents, and the electrons. When they meet together, they cause resistance so that we can get electricity. There is in Uganda one political party called National Resistance Movement. Actually, resistance is like a rebelling. Okay, rebelling to fighting back. That is resistance. Market can be fought back to move down. As it is moving down, the same market can be pushed again to move up. Whenever market is pushed up, we say that it has been supported. Okay, the people who have been resisting the market to move up, they are pushing it to come back. Now they are those ones who have supported it to move the same market up. Once market has faced resistance, this is called selling. Whenever there is selling, we shall say market has been resisted. And whenever there is buying, we shall say market has been supported. Hope you get that information. You only need to understand the business. There is no magic in this business, members. No, there is no magic. Someone is saying it is too much physics. No. There is not too much physics here. So when there is resistance, it is caused by selling. And when there is support, it is caused by buying. Whenever buyers are more than sellers, okay, 10 buyers, 2 sellers, market will be supported to continue moving up. But when sellers are 20, let's say sellers are 200, buyers are 100, meaning sellers are very many and buyers are very few. Now market is going to be resisted and move down. But along the way, when the market is moving up or down, in between there, one of the two might come in. Either the buyers might come in to top up on the numbers. Let's say we get more other 400 buyers to make 500 buyers when sellers are still remaining 100. Now the buyers have outperformed the sellers. Market can be forced to go up again. That's why you are finding market has been moving down, and now along the way it has been forced to go up. If you had shortened the market, those who are trading futures, thinking that the market is going down, now it has reached somewhere and pushed up again. What is it? Meaning buyers have outperformed the sellers. If you are to open any coin, the buyers have their own candlestick you can use to know them, and the sellers. Whenever you see a green candle, this green candle symbolizes buyers, okay? Green candle symbolizes buyers, and the red candle symbolizes sellers. So when the sellers are very many and the buyers are very few, the green candle will be long. Now I'm explaining using the simple analysis one you can base on as you are trading, because some people think that crypto it is something came from Mars. No, this thing is just to understand it in your own simple ways. The red kind I've told you, it symbolizes sellers. Its length is determined by how many sellers and its shortness determined its length its length is determined by the number of sellers. Then this green candle is the one which symbolizes the buyers. So if buyers are very many, you will see the candles are coming. They are too long, being pushed up, being pushed up, being pushed up. So now, how do you know that now people have started taking out their profits? See, now people have started now buying more. It is because of these colors of the candles. But these are not enough for you to enter into the market. No, we always base on what we call other indicators, amongst which we have moving average, double Bollinger Band, volume indicator, the MACD, KDJ, RSI. Today I'm going to teach only within the remaining 9 minutes about this moving average, and I stop the class today. I like trading pumping coins, mostly with 1 hour shortly, 1 hour mostly. I enter and sell manually. I know it's risky, but if you must advise what I should consider. Okay, I'll read that question again at 9:57, and let's see. So I'm going to teach about only the moving average. It is one of the simplest indicator to use. Even a P1, a primary one chap can also use it. So simple, so simple. This moving average, if you don't have it, you just tap on it like this, it will disappear. Let me remove all the indicators. This is how the chart looks without indicators. If you tap on it, MA, the moving average, will appear. What is this moving average? These are the lines you are seeing here. These are the 3 lines you are seeing there. Any indicator we are using in the market majorly has 3 areas. If you remember, at first I told you, market moves within 3 phases: the overbought, the pivot phase, and the oversold phase. Same like other indicators, they are showing you those 3 areas. All the indicators, they come up with these 3 areas to guide you clearly on what you are supposed to do. This moving average, when you tap on it like this, it will appear into your chart as you are seeing. And again, you are given a description of this moving average. Up here, if you can see, there is this color, which is orange, and there is one orange line here. There is this purple or pinkish color. That line is also here. There is also, no, this is pink. There is also purple color here, and that line is here. So it is like this. This purple line goes to that. Okay. Let me use this one, yellow color. This one goes to that. And let me use Can I get this color which is like a pink? Let me pick pink here. Anyway, let me pick my pink here. Okay, this is the pinky color. It goes to that area. Exactly, the colors are fine. So this yellow line, which is similar to orange, I mean this one, it is looking at 7 candles on your chart starting from this one here. You count 7 candles. That is 1, 2, 3, 4, 5, 6, 7. This line, it is looking at how those 7 candles have been performing. It has moving average number 7. Okay. Then there is this pinky color here. There is that pinky color there. This pinky color here. It has moving average number 25. For it, it is looking at 25 candles starting from here going back. You count 25 candles. Then there is also this another line here. You are seeing here the purple. It has moving average 99. For it, it is looking at the past 99 candles. We have seen one, it is looking at 7 candles, another 25 candles, another one it is 99 candles. Here, pay attention as I'm showing you the small technique you can use within this indicator as you are considering the proper entry into the market. When you are analyzing the market, we use an approach called top-down approach. If you don't use this approach, you are so likely going to mess up. We use an approach called top-down approach. This top-down approach simply means we read the market from a higher time frame, going to the lower time frame. If you were to use this approach to get the clear market entry, therefore, based on the higher values of this indicator to determine the clear entry of the market. So it will be this moving average for 99 candles, which you can always focus at when you're analyzing the market, and it will give you the clear image how you can enter the market. Remember, if you trade against the market, the results are tiers. Okay, if you trade against the market, what will come up of that one? It is the tiers. Look, I've said that we are going to rely so much on this moving average line of 99 to give us which direction of the market. Look here, because this is the superpower of these, my time is almost finishing. I'm also almost finished. Because this is the superpower of these other moving averages. Where it is decides where market is going. If it is above the candles, okay, in simple terms, let us not complicate analysis. If you find out that this line is above the candles, better know it is pushing the market down. Simple. Don't waste a lot of your time bringing a lot of technicalities, what, the Pythagoras theorem, you get X, Y, solve this one, simultaneous equation, oh, that one is too much. This is simple. For you, look at only this line. Because we are using an approach called top-down approach. This top-down approach, we read from higher time frame. This one considers the higher time frame. What is happening based on the higher times? If you find out that this purple color band or moving average line, it is above candles, better know the market is going to go down. If you were to short the market, those who are trading futures, think of shorting it. If you're trading futures with such kind of an indicator and you long the market, you are done. 2, if you find out that this same line, it is below the candles, better know the market is still going up. However, consider the time frame, because this kind of analogy always changes based on the time frame. You may find that if you go to 15 minutes time frame, things might change, okay? If you go to, let's say, 3 minutes time frame, things might change. Let me get one coin here with such kind of changing information. Let me get one, which coin here, which coin here. Let me use exactly this one. Yeah. In 3 minutes time frame, it is down, market is moving up. If I go to 1 hour time frame, still down, showing that our market will move up. If I go to 1 hour time frame, 1 day time frame, it is up. We are seeing market is going down. Simple as that. You don't need to complicate things. In a brief, when you see a smaller or small moving average, that is 7. When you see a small moving average, 7, when it is above the candles and the big moving average, that is 99, when it is below the candles, this coin is moving up. Opposite of this one, or the reverse is true. When you see this bigger moving average, it is above the candles, and the smaller is down the candles, market is moving down. Simple as that. At 1 minutes past, I've explained the moving average in simple terms. In details, more about moving averages, I'll come one day again. Let me answer this person. Leader, I like trading, pumping coins. Someone may ask, where are you reading that question from? I can read it from another side. Let me show you the question. Someone is here asking. Leader, I like trading, pumping coins, mostly within 1 hour. Mostly I enter and sell manually. I know it is risky, but if you must advise, what should I consider before taking such risk apart from greed and fear? Technical analysis. What you might consider, you have told me to advise you, selling at a loss. No. Manual selling, it is so nice when you are selling a coin which has bought from initial first buying amount to fourth margin call. Manual selling, if a coin has gone into floating profits, there is no loss you are making. But if a coin has bought more than 5 margin calls, let's say the coin has been on 7th margin call, now its market value has started moving up, it turns into green color, and you sell off manually. You are selling off this 7th margin profits for this 7th margin call, but you are forgetting 5th margin call and the 6th margin calls, they are still in floating loss. Plus the first 5, they're also still in floating loss. So you are making losses here. You get it? You are making losses there. So you may think that you are selling at a profit, yet you have lost money over here. My advice would be, if you are entering these pumping coins, the advice I can give you, enter them at least with 30% of your total capital. Then keep the 70% for margin calls, just in case market goes against you, that it is. But if you enter with 90% of your capital in a pumping coin, my brother, you are putting a rope in your neck. Simple as that. Any other question? Any other question? Any other question, members? Have you understood? Have you understood? If you have understood, give me a tweet in the chat. Then I close this class. Yes, people have understood. People have understood today. We have talked about market analysis. Specifically, I've discussed the market journey, that market covers 100%. Along the journey, it has 3 phases, that is overbought, expensive, premium, the pivotal phase. The third phase is called oversold, discount, or cheap phase. So technically, we have looked at one indicator called the moving average in simple terms. In other classes to come, I will exhaustively talk about again the moving average. Then I add on another indicator called the Bollinger Band. After the Bollinger Band, I'll talk about the MACD. After MACD, I'll talk about the AutoFib. After AutoFib, I'll teach about there is one called Smart Money Concept Indicator. It's also nice. Yes, as time goes on. We have another session at 10 a.m. According to our timetable, there is no another session at 10 a.m. Yeah, there is no another session at 10 a.m. But if you need, I can get another team who is teaching, and I drop the link for you to learn. No problem. Yes, members, it has been a pleasure having you on board. Let's meet again next week. In the evening, we are having another class about technical leader Bashir, I think. Yeah. Leader Bashir will be with us. Leader Bashir will be with us. According to the timetable, Leader Bashir will be with us. Leader Bashir. Yeah. Leader Bashir will be with us according to the timetable. This is our timetable. If you have not yet got it, put your leader, will give you the timetable. You can take a screenshot of it. Yeah, in the evening we shall have Leader Bashir, same class technical analysis. Been a pleasure having you on board. Let's meet again next week. Thanks for attending. Thanks for being a part of this call. Allow me to stop here. May the good Lord bless you. Go and practice what you have learned. Bye-bye.